Hi, guys. Welcome to another Hustle to Wealthy episode. Today, we are talking about cash flow versus capital growth. Mark is here with me, which is super exciting. So, if you're staying till the end, we will dive into the three things to consider if you are considering should your portfolio be optimized for capital growth versus cash flow. And many of our members have been using this strategy and the three different reasons to consider what they wanted to do in their portfolio to achieve their end game. So, Mark, let's dive into it.
Sure. Where do you want to start?
So, I think we should talk about probably end game first, right? Like, to me, knowing where you want to go and where you're wanting to head has a real big impact on do you optimize for cash flow or do you optimize for capital growth, right? And there is no right and wrong between, like, investors, because it really depends on where you want to go, right?
Yeah, without a doubt. I mean, at the end of the day, guys, you don't live on capital growth, right? You live on cash flow. So, you've got to determine that over your whole portfolio when you're building it from, day one to day 50 years old, right? Or 50 years, right? It's a long-term thing and well past we've gone. So for me, cash flow has always been, they say cash is king, and cash flow is queen, right? And we always know who rules the roost, right? It's the queen.
I'm glad you know that.
Yeah, mate. Look, this is why I got a happy wife and happy life, right? I know who rules. I know what the deal is. So you've got to you've got to look at that, right, and go. But at the same time, to create more cash flow, you quite often need to have more capital, or you have those assets that can grow in capital growth and allows you either pull the equity out or you sell those assets to get the bigger capital and then redistribute or reallocate it into your portfolio. So that's what you've got to look at. Yeah. And like Paulina said, the two, whatever you're doing, doesn't matter what strategy you're going into, whether it's capital growth or whether it's cash flow, you've got to have those two data points, where you want to be and where you are now. You have to have something to aim for, and then you've got to have the platform right where you are now. That's it. That's how you build your decide which way you're going to go, what's going next.
Yeah, so the way I look at it is like where like seasons, right? Which season is your portfolio in, right? Like nature and us as human beings, you want to have a look at your portfolio, like how far into your portfolio are you already in? How many foundational assets versus high risk assets do you already have? How quickly are you trying to get to somewhere, right? Like in long term, do you want your portfolio to be like producing you high returns, which means also potentially higher risk or lower returns, right? Mark, you'd always talk about, give me 10 million, making me 10% over a million, making me 100. So even though the outcome is the same, you really want to have a look where your portfolio is at. Which brings us then to number two, and that's your own personal season, right? The starting point. So you want to like consider what's your age, how much do you already have in your portfolio, right? Do you have millions in your portfolio or you're starting out? Like how many years are you happy to continue working or doing whatever you're doing to grow your portfolio, or do you want to live on the cash flow now? So depending on that choice, you would make a different decision around cash flow and capital growth, right?
Yeah, without a doubt. Yeah, and also, what are some of the goals you're wanting to achieve? If you're trying to reduce your workload, or you're working a lot of overtime and you want to, do 1 or 2 days less overtime a week or a month or whatever it is, then it could be that you're focused on that cash flow to start with. Yeah. And then once you've done that and you build up that cash flow, you're working less, and then you could start to build out that capital growth. But there are other things to consider, right? Like banks, as an example, our mates at the bank, and I use that term mates quite loosely, right? They won't accept income from crypto. They won't accept income from foreign currency or trading or anything like that. They'll only accept your employment, your business, or some nowadays won't even accept rental income, right? Or which just does my head in. But they'll give you a credit card without even wondering whether you can afford it, So anyway,
Random.
the, yeah,
Actually,
right.
that's
So,
okay.
well, I think it's because I just spent an hour in the bank yesterday, right, setting up a foreign currency account, and I'm just the crap that we had to go through to just open it. It was just insane. I just think, man, you guys are so archaic. When I can send Paulina $100,000 and she'll get it in a second, using things like crypto and stuff, right? Which is why they're so scared of it. Anyway,
Went over. Let's go back to,
again,
where are
yeah.
you and your personal season?
Strike two, Robinson, she says. Look, where was I heading? Oh, it comes down to leverage, right? That's what I was getting at. So that's where I was heading. So if you are looking to, go into property and you need that leverage, then you're going to have to consider whether, going in, having all these other cash flow strategies are actually going to benefit you. You might be better off actually doing more overtime so that the income that the banks accept, right, is a better option. So you can go buy that second, third, or fourth property. Does that make sense? Right. So what I meant by that before all the ranting was you've got to look at the strategies you're going into and see whether, even though you've created all this cash flow, is it actually better for you to reduce your hours, right? And live on that cash flow, or are you actually better off just keeping it up for another 1 or 2 years, right? We actually say all the time that sometimes increasing your active income is the fastest way to become financially independent. Yes, work more now, right, to become financially independent sooner later. Does that make sense, guys? I hope it does, right? So you could be better off not living on the cash flow that you've created in your portfolio, leverage, right, and buy more property, yeah, and then use the cash flow to pay down the debt, so on and so on, and keep working the way that you have been over the last couple of years.
Or you bypass the banks directly when you want to go through and leverage other people's money, right? Joint ventures or second and third tier lenders. And we could go down the rabbit hole. And it's funny because when we started in our own personal season, when we started our investment, like I hustled. I hustled, like this is what this podcast is about, right? How do you go from hustle to wealthy? And we hustled 100 hours a week, like both of us going mad. I wouldn't recommend it for anyone. But we were quite happy to compound our portfolio for 3 years because we knew the more, like, we only started at the time with 10 grand. And I was like, if I can make out of 10 grand 100K or 100K 300K, then it will make it easier later on. So we created ourselves into this, we compounded, and then we started cash flow in the crypto world. And then we were like, oh, we can't get a mortgage. But it turned out that we didn't even have to have one, which is great, right? And it turns out that sometimes banks, even like when you're thinking about international income and stuff like that, that banks can say no to you, even though you have all of that money, just because they don't like the fact that the money is coming from an international source, or even if it is active income. So definitely have a think about where you're at. Do you want to live of it right now, or do you want to live of it later, and what strategies are you planning? And then I think number three, nice and easy, is where's the opportunity at, right? So we don't time the market, because if we could time the market, we would be all rich, and I wish I had this crystal ball. But you do want to consider where the market is at. So, for example, if you have the crypto bull run or the bear market, the strategies are very different, right? Like some strategies, like in the bear market, you might be considering a lot more of a capital accumulation strategy, versus in the bull market, you might be considering a lot more of a cash flow strategy, right? And living of it and generating cash flow.
Yeah, look, without a doubt. Um, and I know I'm slow to respond to it because I was just thinking about like what you said around, the before about the seasons and what have you, and your season is going to be completely different to my season, to someone else's season, etc., etc. And I think it's important to really understand that before we go into that whole bull market and bear market and what have you. So and, and if you truly get that, because there's I think right now, right, there's a couple of areas that we're going to go into more of a bull market, and then there's going to be other areas that we're going to go into a bear market, depending on how you're looking at things. And I said this in one of our fortnightly sessions on a money talk thing earlier this morning. The inflation is going Burko right now. You know what I mean? Like Paulina and Tyrell, right? Billy and I, we've been really, we've built our life our way, and we've been doing a lot of travel recently. And I can tell you, inflation is insane. Like Billy and I went out for dinner, and we didn't even have that many beers on the menu, and it was $140 in Vegas. Now the food was good, but not $140 good, right? It was freaking pasta. Um, but the key here is, if you understand like those cycles, right? Everyone, a bull market, it's all good old economics, right? Supply versus demand. If demand is up and supply is down, prices will increase. So why I bring that up is, if you think that the bull market in crypto, as an example, right? Because here's a season, everyone thinks that there's a bull market around the corner. I can't see it yet, and the reason why I say that is because the retail investor, right? The average mum and dad, they don't have any spare money at the moment, right? They have zero spare money to invest in what could be deemed as speculative. Yeah. Now, we don't think crypto is speculative, right? We actually think SID is the future, and we're excited about it. We're making good money out of it, etc., etc. But the normal mum, like I said, the average mum and dad out there who isn't in this space, they don't have a spare $100 a week, $200 a week, $500 a week. They're trying to work out, how the hell am I going to fill my petrol tank up? The other one's going, can I afford the mortgage next week? Right, this is the key here, and this is why you guys who are listening out there, right, you don't have to hustle more. You don't have to do more. Look, I know this sounds weird, but you don't have to do all this stuff. All you have to do is just take a little bit of time out and go, how do I add $100 a week, $200 a week in extra cash flow to make this happen? And that will then this will then determine what season you're in right now. Yeah, because if you're struggling to make ends meet, you're in winter. That and please correct me if I'm wrong here, Paulina. This is how I see it. Right, we need to get you from winter into spring. Right, which means you might have to stay in winter a little bit longer. You might have to go get a second job and all that sort of stuff. Now, I know that most of the people that are listening, right, aren't in that space, but I want you to consider who your people are, right? Because we're talking to, you might, I know that most of the people that are listening are, have got 50, 100 grand a month cash flow, right? But who are your clients, right? There's a good chance that your clients could be these people that I'm talking about. And it's a flow on effect, because there's going to be no bull market in the crypto if we can't get the retail market into that space. I hope I
Yeah,
made sense on that one.
yeah, yeah, absolutely. And I think this is the thing, right? You said, like, if you can't make $100 or $200 a week work for you to put into your investment portfolio, then you are definitely in winter, and you're looking probably a lot more into like a cash flow strategy than capital growth strategy. However, if you are like making 50, 100K a year, and we are in a bear market, right, or just at the beginning of a bull market over the next 2 to 3 years, you might be going, I'm quite happy to dollar cost average into a coin or into a share or into something else, knowing that the boom lies ahead of you, right? You might be quite happy to go, I'm going to purchase a buy and hold property that I rent out, because I know in 2 3 years time the market might turn, the market will turn around in one way or another, right? So very much need to consider, and I think this is the key, you need to consider where, like, all three aspects, right? Where's your portfolio at? Where are you personally at? And then where is the strategy or the asset class at? right? Because there is such a thing as the wrong strategy, the right strategy at the wrong time. And that
Long
definitely
time. Yeah.
relates to the whole, you might be going for the, like, you might be going, I'm buying a buy and hold strategy, but really what you're trying to do is recession your prove your business and get another $50,000 a year, sorry, a month in. Now, a property will never get you $50,000 in a month, right? If you have a buy and hold strategy. But if you might be doing developments or flips or whatever, that might be a completely different story. So definitely need to consider all three aspects and where they are within the seasons to go and say what is the right strategy for me. Is it cash flow or is it capital growth?
Yeah, I couldn't agree more, mate. And there's so many, there's so many interesting things happening in the world right now. We could go on forever about which is which, and what have you. And look, all I'm going to suggest, guys, without giving any advice, is just watch. Look at the bigger picture. Don't stress about it, because there's nothing we can do about it. Right? I can tell you that right now. There's nothing we can do about it. Yeah. I got so many, number of people going, oh, we've got the November elections happening, right? That's one country that's got an election. Now, don't get me wrong. Whenever they
Granted, it's
say
the
a draft,
USA, right? So
yeah,
it's their
right.
country.
Yeah, it's the country, right?
Yeah.
And look, we're not going to get political here, right? They're both idiots. Whether one idiot stays in or another idiot gets in, right? It really doesn't matter. But I want you guys to consider, well, probably look at from a political point of view. If this guy gets in, what markets are going to go ballistic and what markets aren't? If this guy gets in, what markets are going to go ballistic and what aren't? Right? That's what I mean by having a look at the bigger picture. Even though you cannot, there's nothing you can do about what happens there. All we're suggesting is just be prepared, right? Get that education space. Go listen to someone who has, like Luca and Arthur, right? A couple of our coaches, and like bloody awesome people, man. Their understanding of the macroeconomics of the world is second to none, right? And we've had them on our podcast, right? Paulina, you
Yeah.
interviewed them a while ago. Um, and those two humans know some incredible stuff, and some of the other people that we know and the conversations that we have, like, they just blow me away. Um, I've done a podcast. I don't know when we're launching it. I hope it might have already been launched or after this one. But I did a conversation with Kelly Korshak, and I actually wouldn't mind getting him back on, Paulina, with both of us interviewing him.
I would love
But
to. Yeah.
Kelly, we had a real conversation. Literally had a conversation about Tweedledee staying in or Tweedledum getting in, right? And he actually speaks. That's how we did it,
Got it.
right? Because we tried to stay down the non-political path, and he just gives you some valuable insights as to how your portfolio could perform if this happens or if that happens. Yeah. And that's where now, though, if you get educated, you'll start to realize about going, should I be chasing cash flow now or should I be chasing capital growth now? And you'll be able to put it into those seasons, like Paulina said at the start.
Well, it's interesting you say that. Like, we had a similar example in New Zealand, just to put it actually into perspective. So we had one government in, and the government went property, right? Every one of us understands property. We have something called the bright line test. The bright line test in New Zealand means if you have a property for a certain amount of years, you do not have to pay capital gains on it, right? So we have one party in, and they go, the bright line is 2 years. Everyone goes in, everyone buys property, investment properties, and they go, in 2 years time we can sell them without having to pay for capital gains. Then the second party comes in, right? The party change, and they went, the first thing we're going to do is change it to 10 years. So now everyone who purchased property went from 2 years to 10 years. And the strategy of like flipping a house in 2 years' time and getting their capital back and not having to pay tax now turned into a buy and hold strategy, right? In a market where, if you think about it, at the time it was great because money was cheap, COVID, money was cheap, 2-3% interest rate. Everyone was like, this is wonderful, this is amazing, right? And then the interest rates went up. So here you have 10 years, interest rates go up. Guess what's happened, right? People go, I don't know what to do with myself. So now, since then, we had a political change. And guess what the new party's just done? They went, hey, by the way, we're changing it from 10 years to 2 years, right? This rule applies in July 2024, which means the market gets flooded with properties where people were stuck and they're suddenly going, we can now send it. We don't have to pay capital gains, woohoo, and we don't have to pay the extra interest rate. However, what do you think happens when thousands and thousands of properties flood the market? Do you think there will be even a
Exactly.
worry about capital gains? Like properties are 10, 20, 30% below what people purchased them on in the first place because there's so many on the market. So you do want to have a little bit of a insight of how the bigger man might play an impact in your strategy. Anyway,
Yeah,
three things.
you know,
What were
and,
they? Yeah.
and well, just to finish on that, right? Like, where's your mindset? Are you looking at it going, oh my God, property's going down, I'm not going to get into the market? Or are you going to go, oh my God, how cheap is property? I can't wait to get into the market.
Yeah, I was talking to a property developer yesterday. They went from uh, 270 property bust because of the government changes in flood zones. So they purchased land for 270 properties. They changed flood zones in the last government, which made this whole thing not viable because it was in flood zone and no one would purchase, right? So that is a big headache. To now going, but they, instead of going, oh my God, we've just sank 270 lots of money, they've rebuilt and they are now back to doing 175 to 200 blocks a year. Like his goal is to do 200 properties a year, right? And I asked him about this deal, and he explained what happened, flooding zone, etc. But this government right now is turning it back to a different flood zone because the last one, he thinks it was OTT on it, right? So what's happening now? He's looking back at the same thing, going, okay, how am I going to make money out of it now, 3 years later? Right. So it's really
Brilliant.
interesting. Mindset is huge. All right. So to wrap it up, there's actually 4 items that we need to consider. Where's your portfolio at? Where are you personally at? And where is the market at for the strategy that you want to apply? And then obviously number 4, really big one, is mindset. How are you going
Yeah,
to act when these shifts happen? So
without a doubt, mate.
looking forward to hearing some comments. Let us know what you think, where you at, and go from there by making your own decision if you should do capital growth or cash flow. See you on the
100%. I'm looking forward to catching up in our Queenstown studio soon.
Yes, me too. I hope you're bringing the jumper. See
I,
you guys in the
we
next
got
episode. Yeah.
an LA studio, a Thailand studio. I think we did one while you're here in Sydney, and then we got a Queenstown studio.
Yeah,
Loving
I'm
it.
liking it. It's good, right? And then in
Good
September we're
chat.
gonna have a Miami studio, and in December we're gonna have a Dubai studio. So we are ticking off the studios.
Uh, we're good to go, right? Hustle
Catch
to
you guys
wealthy,
soon.
guys. That's
Yes,
how we do it.
catch
Stop,
you on the
stop
next
hustling,
episode.
get wealthy. Right.